Welcome back. For the time being, the Nifty has not gone to that intraday low and has maintained that 6,060 mark. But really, 7 or 8 points, you never know where that can come from. Rishi Kohli of Pro Alpha Systematic Capital now joins in. Rishi, hi, good morning. We put behind a very volatile series. The last week was quite unnerving. Does that change things, and how would you approach Nifty now for the February series?
Actually, what has happened is very interesting. In fact, a few weeks back on your show, I had mentioned that the volatilities were at really low levels, and there were signals of it increasing. And that has basically happened in the last week that you're mentioning about. It's gone, the IVs have gone from 13, 14 to 16, 17% levels, come off slightly now from 17 to 16, but basically the way it's behaving, it looks like a much larger rise in volatilities on the cards sometime going in the future. Secondly, from a directional standpoint, if you see in the last 4 months, almost from mid-October, Nifty has been in a range of 6,000 to 6,400 and almost gone 3 to 4 times to both ends of the range. And it seems to be some sort of cautiousness and non-clarity related to elections and no other triggers being there why that is happening. But usually this is almost like one of the longest sideways stretches the Nifty has ever seen. And usually statistically that is a very, very big outlier. And whenever we've seen statistical outliers like that, there is a big move that is around the cards. So that combined with the elections coming up, I think it is possible that 1 or 2 more months of range trading might happen. One can't rule that out. But post that, say a month before elections to at least 6 months after elections, I think there's going to be very, very large moves, both in terms of momentum trend as well as a pickup in volatility. Anything could happen. I mean, the medium-term bias as of now still remains positive. As I've said earlier, it's a buy on dips market. Broadly, that's been working. So I would still maintain that until some larger signals change on the index. But all I'm saying is that, this 4-5% kind of range trading that we've seen, this is surely in a month or so about to give way to much larger 10 to 20% ranges. So there are interesting things both from directional as well as volatility standpoint, I think, which can be capitalized on.
Directionally, the bank Nifty has quite clearly broken down below the moving averages for an emphatically longish period of time, maybe for the past 10-15 days. Would you play the bank Nifty or would you play ICICI, which I think is your chosen short for now?
Right. So yeah, I would differentiate because what is happening interestingly, while overall bank Nifty has been giving much larger momentum than the Nifty, and therefore both on the short and the long sides in various phases in the last 1 year has been pretty interesting to trade. But now what is happening is there is some sort of divergence between some of the PSU stocks and some of the private banking stocks. So what we are seeing is that things like, say, SBI, that's already broken much more than, say, an ICICI, and is at a position where there could be some short-term, mean reversion happening. So it would be very difficult to go aggressively short on that, whereas ICICI still has room to go down. So relatively, whether you ask me Bank Nifty or SBI or ICICI, I think I would go with a trading bet on the short side on ICICI. And if one wants to be a little safer, one could do like a short ICICI, long SBI, and I think it could be a very interesting pair trade.
Okay, that's interesting. DLF, you have a contract kind of call on that one. It's been a weak stock, but you think it could go higher purely on short covering?
Yeah, so there are again 2 angles on this. It's again been trading in a range of between 120, 125 to 170, 175 for the last few months after having broken down significantly over the past year. And right now at 135 or so, it's at the bottom end of that range. We had a sell signal on that from around 165 levels, which has played out well. So what I'm suggesting right now is that one should cover that those shorts in phases depending on short-term oscillators being deeply oversold or some strategies like that, and then on very shorter-term time frames, hourly or something, start looking at momentum buy signals if they emerge, because it's very possible that it again bounces towards 175. Having said that, very quickly, the weekly MACD of DLF is at a make or break point. It's almost on the verge of turning negative, and what we've seen in the past is that this is an exciting time because if it turns negative, there could be a much larger bear market on the stock, but if it after converging so much diverges again, then there could again be a very sharp bounce. So I would look at that indicator very closely.
Okay. Well, and your final stock, which is really positive, you're positive on BHEL. Today it's down about 1%, but you would use that opportunity to buy.
Right. So BHEL, you know, whether you look at it technically or on some quantitative parameters like some relative strength and other things that we look at, it looks much more positive than the market, and I think it's shown that you know, portions of that in the last month. For example, in January the stock was actually flat when the rest of the market, depending on the stock, was down between 5 to 10%. So it's showing that relative strength. On a longer term time scale, the monthly MACD and other longer term indicators have turned positive just a few months back, and since then it's been showing this relative strength. So from that angle, it looks like a stock which can easily move, you know, depending on the retracement. So it's obviously had a large fall in the last 3 to 4 years from 500 to current levels, and in phases I think it would make up for those retracements. So next target would be something like 200, from there 250, 260, and in phases it would, I think, recover at least 50 to 61.8% of the entire fall it's seen.
Okay, any disclosures on any of these stocks?
Nothing, I don't hold any positions in these.
All right, Rishi, thanks a lot for that. That's